Good morning, everyone, and welcome to our webinar. Again, this is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website, which does mean that all attendees will be automatically muted so that we can get a quality recording. If you have any questions, go ahead and put them into the chat box, and we'll have one of our marketers reach out to you individually after the webinar, or if we have time during, we'll try and get those answered for you. If you haven't already heard, we just unveiled a new agent resource here at AIM, the 2-Minute Minute. Our marketing team will be bringing you quick hit ways to talk to more prospects, write more business, and grow your agency. We know that most of our agents do a little bit of everything, so we'll make sure that the vlog has something for everyone. And we'll get what you need in just 2 minutes. We're posting new videos every Monday and Wednesday, so check out our Facebook, Instagram, LinkedIn, or YouTube pages to see what you've missed. If you need any help accessing the videos, give us a call at 800-672-7202. So with that, I'm going to go ahead and hand it over to Don so we can get started this morning. Go ahead and take it away, Don.
Thank you, Courtney. Good morning, everyone. How are you all today? Don Erickson here with American Independent Marketing. We have a special guest with us today from Securian Financial, James Romero, the Regional Vice President. James will actually be going over the SecureCare 3 product and a lot of the ins and outs of that. With that, good morning, James. How are you today?
Morning, Don. Thank you very much. Appreciate that intro. And good morning, everybody. Thank you for taking time to be on this call. I'm very excited to be able to present SecureCare 3 to this audience. It's actually a pretty exciting time at Securian representing SecureCare 3. So I've been a wholesaler. This is year 15 of being a long-term care wholesaler. It's my 5th year at Securian. Prior to that, spent just over 10 years at One America. So been in the asset-based space, the hybrids, for quite a long time. Very excited about SecureCare 3 right now. We are head and shoulders standing out in the industry, and we will show that today, especially with all of our features as well. It's an outstanding option they'll provide as a long-term care solution to your clients. But I do want to start out just giving a little bit of background here. So just so everyone's familiar with Securian Financial. So the more common name that you'll probably be aware of is the name Minnesota Life. So Securian Financial is the parent company of Minnesota Life, as well as several other subsidiaries that all had different names. So what we did, we weren't getting the recognition for the large company that we are. You see that first bullet point there, 6th largest insurance company. Not a lot of people would realize that. So what we did in 2018, we rebranded all the companies under the Securian Financial name so we could start getting recognition for the large carrier that we are. And you can see our ratings, outstanding. We're an A+, 96 Comdex, 143 years in business, mutual company. So if anytime you present SecureCare as an option, client may not be familiar with Securian as a company, can show our ratings here. This is always available. This usually helps alleviate any concerns client may have. All right, so let's start talking about SecureCare 3. Now, why it's called SecureCare 3, it's just the 3rd version of SecureCare that's rolled out. We rolled this out April of last year, and we just did a recent price change. You might have seen in the header for the invitation to this presentation. We just lowered premium rates by 25%, so substantial price improvement. And a lot of that just has to do with the interest rate environment we're in. So that's one thing about insurance. When interest rates go up, products can actually be priced more attractively. And we are definitely in the catbird seat with our pricing, looking excellent here. So we'll go through some examples on that. But just to cover SecureCare 3, so it is a hybrid product, an asset-based long-term care plan with all the guarantees. So of course, the first benefit is guaranteed leverage for long-term care. Put money in, get a lot more available for long-term care. However, if you don't end up needing long-term care and pass away, there will be a death benefit. There's even a death benefit if you use the policy for long-term care, so we can cover that as well. There's 3 options for return of premium, depending on how you want to set up your policy. An option to protect your entire premium, or just a partial amount to boost your long-term care. We'll cover some of that. And it does have a reduced paid up feature that a lot of the policies in the hybrid space offer. And meaning if you are doing a multi-pay plan, say paying over 10 years, and along the way, say year 5, 6 example, something happens, can no longer pay your premiums, instead of the policy lapsing, policy can just go to a paid up smaller policy. That way you can keep some coverage, has that option as well. All right, so we're gonna go through some of the design options, the return of premium, as well as some other nice features here. All right, the key item here to understand about Secure Care 3, and this is something that rolled out when we launched last year, is you now have 3 return of premium options, and you have to select one when designing the plan. So when you're doing an illustration, and therefore when you're filling out an application to apply for Secure Care 3, you have to indicate which return of premium option. So this is the bread and butter here of how the product's going to look in terms of benefits you'd receive for the premium that you're paying in. So let's go through these here. So if you start on the left, the vesting return of premium option means you're going to have a full return of premium available. Now, on the prior version of Secure Care, call it Secure Care 2, return of premium was automatically included. So it was a nice feature with Secure Care that you just automatically always had a return of premium available. However, as we grew this product line, we realized that if we wanted to remain competitive in pricing, having a return of premium on every policy was going to put strain on that ability to keep competitive in pricing. So when we came out with Secure Care 3, the key was to offer a choice. So that way, for those folks that still want to protect their premium, they have that choice. But for others that don't necessarily need a full protection on their money back and would like to get more long-term care, we have these 2 other choices. So the middle option is a 75% return of premium. So it's a 75% return of premium at all times. And the trade-off for having 25% less return of premium is you get more long-term care. And we're going to go through some examples here on the next slide so you can see how that would play out. And then lastly, we introduced a new concept to the hybrid space. This is called LTC Boost. So this concept really plays into when we're thinking about the hybrid linked benefit space for long-term care. Return of premium used to be a necessity 15 years ago. Even as far as 10 years ago, return of premium was still a big deal. But what we've noticed over the last few years, having a full return of premium has been just not as much needed. They needed to sell or for clients to feel comfortable move forward. What we really felt was the way the market had gone is people just want the most long-term care benefits they can get for their premium dollar. So what this LTC Boost does is it removes a set return of premium, and it removes a set return of premium upon death, where now it's just like a true life insurance in terms of the cash value. The cash value is the surrender value. So it has your lowest amount of return of premium protection. And then upon death, whatever the life insurance death benefit is what would pay out. So we basically removed all these added return of premium features. And because we removed that cost as an insurance company, we can offer so much more long-term care. And this boost option is what allows Secure Care to stand out in the industry in the hybrid space to offer the most long-term care benefits. So we really felt the market was ready for it, and we were correct. So when we launched this out in April of last year, 98% of policies have been at LTC Boost. So that just tells us you're right. The market really is looking for the most long-term care they can get. However, for those clients that want a little more protection on their premium for that just in case, we do have these other 2 options. Okay, so now we explain that. Let's take a look at some examples here. So this is a 68-year-old female using a $100,000 single premium. Okay, now the blue bar is the return of premium value at age 85. The light green bar is the day 1 total long-term care benefit pool. And then the darker green bar is the total LTC benefit pool at age 85. And that's just due to 3% compound inflation on the policy. On the left, you see the different return of premium options starting top to bottom, the vesting, the 75%, and then the boost. Okay, so let's go through this here. So you can see with the vesting option, the blue bar, you get all of your $100,000 back. And age 85, in the vesting option, your long-term care benefit pool is $392,756. So just under $400,000. You're about 4 times leveraged on your money by age 85. So still really good, and you get a full protection on your return of premium. The 75% option, you can see, very simple, the blue bar, you get $75,000 back if you were to cancel, but you get more long-term care. You see the dark green bar, you get $466,884 for long-term care. And then we go to the last option, the boost. This is the one that doesn't have a set amount of a return of premium feature. It's just the policy cash value. And you can see the policy cash value at age 85 is $73,445. That would be your surrender value. And you can see it's very close at that point to what the 75% option would have got you. Now, day one, it probably would have started around $50,000, $55,000. And it just grows year by year, the policy cash value, just like a life insurance policy would work. But you get even more long-term care. You can see that dark green bar. You're just under $500,000 of a long-term care benefit pool by age 85. So you can kind of see how that works. The larger the long-term care benefit, the lesser the return of premium protection. And then the more premium protection, the lesser long-term care. It's a choice, all there for the clients, but majority are going at that boost. And that's what sets Secure Care in a great position competitively in the market to offer the most long-term care available on a hybrid product. We're going to go through some more features here, and then we'll go through some comparisons, pricing, how we look in the industry, underwriting, and then we'll see if there's any questions. So one other item that's great about Secure Care 3 is we can accept 1035 exchanges. This is great. You'll often run into clients that have some old long-term care policies, or excuse me, some old life insurance policies that they don't necessarily need for the original objective anymore. So maybe years back, they got life insurance for family. Now family's grown, age, they don't need the protection, but they have this cash value. What do? Can 1035 exchange into Secure Care. And then you can make additional payments into the policy if you want. You can add annual monthly payments onto the plan, very flexible to accommodate 1035 exchanges. It's a great option here. We added a waiver of premium as well. This is a great option to have. Now, very few policies actually take the waiver of premium feature, but it's great to be able to offer that. It adds about 3 to 5% of additional cost. If you do add this to the plan, again, it's optional, but a great feature to have. All right, so let's go through some line items here of the product features about Secure Care 3. First and foremost, it is an indemnity benefit. So we do pay the benefits out on cash indemnity. So it's not traditional indemnity where it requires at least 1 day of qualified professional services. It's a cash indemnity. So pure cash, free to spend that money however you want once you qualify for benefits. To qualify for benefits, you have to require assistance with 2 of the 6 activities of daily living or have severe cognitive impairment. And then once you're qualified, you'll get your benefit direct deposit into your account, free to spend that money however you want. So a lot of people in the industry love the cash story, very flexible. There's no need to get your caregiver approved by the company in order to get your claim approved. You don't have to have bills sent into the company and reviewed every month to then be paid for the services. Just once you qualify initially, you'll get your benefit direct deposit into your account. You can take your full cash benefit, even if your care costs less than your benefit. You can still take your full benefit and just save the rest of the money, or you can choose to leave the benefit, your unused benefit, in the policy, and the benefits will continue to grow with inflation, and we'll just make the policy last longer. Whatever the client prefers, you have full flexibility there. It's a guaranteed death benefit. Even if you use the death benefit for long-term care, there still will be a death benefit. So it does have a residual death benefit feature. The residual death benefit is the lesser of 10% of the original life insurance or a cap of $10,000. So $10,000 is the max. Let's say the life insurance death benefit is $88,000. The residual death benefit would be $8,800, 10%. So 10% with a cap of $10,000 on the residual death benefit. There's a guaranteed reduced paid up feature, as we mentioned. Anyone on a multi-pay plan stops making payments, instead of having to lapse the policy, they can do a smaller paid up policy. You have multiple premium options. You have a single pay, 5, 7, 10, and 15 pay options available. But one item to note with the multi-pay option, you have to be able to pay up your policy by age 80. So your age determines what of the multi-pay options are available. So if you have someone that would like to do a 15 pay, the oldest they could be is 65 to start that policy. That way they can be paid up by age 80. Same thing if you're to do a 10 pay, the oldest you could be is 70. So it just goes by your age, determines what's available to you. You have to be able to pay up your policy by age 80. We have all the inflation options, 3 and 5% at both simple and compound. I will let you know the 3 compound is the most common, and we stand out for sure in that section. And we're going to see that here on some samples, comparison samples coming up. Now, the way the premium is designed on Secure Care 3, you actually pay a premium for the long-term care features. So you might have seen this on some other hybrid products. So, for example, the extension of benefits rider, the inflation protection. When you pay your premium for your policy, it's broken down into categories, and a portion of your premium will be allocated to what's called these long-term care features. And that's considered a long-term care premium. And there's eligible, those types of premiums are eligible to be deducted on taxes. Now, it's very difficult for an individual to deduct long-term care premiums, but when you're a business owner, it becomes a lot more flexible. So if you're familiar with the business owner concept and deducting long-term care premiums, Secure Care will fit into that category. One item that really stands out with Secure Care is the international benefit. So how we stand out is we allow you to use the extension rider internationally. So a lot of the hybrid plans are capped at only allowing the base policy, so the first 2 years, to be used internationally. We don't do that. You get your entire benefit pool available to you internationally, and it's still indemnity. There's no restriction on the type of care that you're eligible to receive internationally. What we do for our international benefit is we reduce the monthly benefit in half. So whatever your policy would be here in the US, say it was an $8,000 a month benefit for 6 years, internationally it would be a $4,000 a month benefit for 12 years. So it would double in duration because you still get the entire benefit pool available to you. Another item that makes the international benefit stand out is you do not need a US licensed doctor in order to submit your claim. We will actually work with an international doctor that's not US licensed. They can provide all the documentation needed for a claim. And what we do is our claims administration partners with US licensed individuals for healthcare, and they can do the US certification based on a review of the documents supplied by the international doctor. So very flexible in how we work that there. The only thing is we just require the insured's expense. If the information sent from the international doctor is in a different language, they would need to pay to have professional translations, certified services to the information, so that way it's in English when submitted to our claims department. We have a 90-day elimination period. We actually have a great elimination period. It's unique in the industry. So what we do, we begin the 90-day elimination period based on when the insured, we can certify that they were chronically ill. So we will retro start the elimination period based on the point in time we can verify that the insured was a chronically ill individual. Chronically ill, again, defined as requiring assistance to the 6 activities of daily living or severe cognitive impairment. So for example, if someone has a Secure Care policy and filed a claim today, however, we can verify that they've actually been a chronically ill individual for more than 90 days, then they would have already satisfied their elimination period, and we can begin making payments immediately. So very flexible in how the elimination period works, as long as we can verify. The best way is through documentation with doctor's records, and we can verify they require the 2 of 6 or severe cognitive impairment. We'll start the elimination period based on that retro date, and then base the 90 days off that. So potential to get benefits right away. Really flexible in how that works. We also have a great terminal illness benefit. So instead of going on claim, let's say someone has a terminal diagnosis, don't have much long to live. We define it as 12 months or less to live. Instead of going on claim monthly, they can instead choose to advance the death benefit up to leaving $12,000 in the policy. So if they had a $100,000 death benefit and they were terminally ill, instead of doing monthly benefit claim, they could just take $88,000 as a lump sum, leaving $12,000 of life insurance in the policy, if they chose to do that, if that was more beneficial to them. So nice terminal illness benefit as well. Okay, here's what everyone wants to see. How do we compare to other products in this space? So what we're showing here is Secure Care matched against the 3 other most popular hybrid products, so MoneyGuard, Care Matters, and then Asset Care. So the first example here is a 60-year-old female using $100,000 single premium, 6-year benefit duration. We're doing the boost return of premium option, and 3% compound inflation. The key number to look at here is the very bottom. What's that monthly benefit? So you can see this is the day 1 monthly benefit. With Secure Care, we're at $5,589. Everybody else, about $1,000 less in benefits. So right here you can see Secure Care in this competitive space offers about 20% more long-term care benefit for your same premium dollar. So pretty astonishing. As I mentioned, it's a great time being a Secure Care representative. We just are significantly standing out in this space. Let's take a look at the male. Same thing. So 60 years old, 100,000, 6-year, 3 compound. Day 1 monthly benefit, $6,489, $1,000 more than everybody else. So you can see at least 20% better from that standpoint. Rock solid here on our benefit comparison. And it's not just the single pay. Even in a 10 pay, same scenario, 60-year-old female, all the same setup. Our initial monthly benefit, $4,563. You can see about $900 better than everybody else. So still maintaining that same 20% advantage. The male, day 1 monthly benefit, $5,257. You can see around $900 better, maintaining that same advantage in pricing. So you can see all the different types of payment options that are available. You can see Secure Care is going to stand out with substantially better pricing. From this standpoint, you can see with the benefit pool that you get versus the others. This next slide I really like. So what we're just showing is everybody using the same premium and seeing how much benefit you get. But let's look at it from the reverse angle. How much less premium would you pay than other carriers to get the same policy? So this is really nice. So what we're looking at here, 60-year-old male, and with all the carriers, we're going to set up a $5,000 initial monthly benefit, 6-year benefit pool, 3% compound inflation. You can see on the single pay, we're $77,053. Everybody else is above $92,000. So at minimum, you'd save $15,000 if you went with Secure Care over these other options. And don't forget, we're indemnity as well. A nice feature there. 5 pay. Total after 5 years, you'd pay $85,775. Everyone else is over $101,000. So again, minimum $15,000 that you would save by going with Secure Care. And then the 10 pay. We're at $95,119. Everybody else is at least $112,000. So you'd have, again, at least $15,000 that you would save by going with Secure Care versus some others in this space for the exact same policy design. So you saw that headline, reduced by 25%. I mean, it's there. I mean, we are substantially sounding out, and you can, by presenting this, you can save your client a lot of money to get a very strong policy with all its features. Now, I will add this, because a lot of feedback I get is like, well, what's going on? Why do you guys stand out so much? Well, two things. One, we got rid of the automatic return of premium. It's now just a choice. So that boost option is what allows us to do that. And then just what we wanted to do is stand out. So that was our key feature here. We wanted to look good in the most popular areas, and that's in that 3% compound, having indemnity. And now with our pricing, we're right there in that category for what we feel would be the preferred desired option: indemnity, guarantees, and being able to have a really good price. So that 25% really makes us stand out. To the point where if you have two people, all right, One America has a joint product which offers great pricing because you can put two people on one policy. We now compete in that space. So definitely want to take a look at Secure Care, even if there's two people. And what you'd want to do on the Secure Care is run an 8-year benefit. So we have an 8-year benefit that we can do with inflation on the entire policy, and everything's guaranteed. The Secure Care is guaranteed, One America is guaranteed. So you can see the numbers and you can do the math. If you do a sample claim at age 80, just see what the benefit pool you would get on Secure Care would be. We will have a higher monthly benefit than the Asset Care. And you could see how long it would take, how long you'd have to claim on the Asset Care to match what you would get in benefits in 8 years on the Secure Care. And it's usually at least 10 years. So you can go ahead and see an example. Even in the joint space, we are competing right now. That's how great the 25% has made us look. All right, wrap up with underwriting, and then we'll see if there's any questions. So everybody does a phone interview. So it's the part 2 of the application, which is where you'd ask health questions. You as the agent actually don't ask the health questions. That's all answered in the phone interview. So that portion of the application is completed in the phone interview. So everybody does a phone interview. And then after the phone interview is done, they'll either approve the client, decline, or we'll then pivot and get medical records, which we order. So you don't have to do any of the work there. We'll take care of ordering the medical records. It's about 70% of applications don't need medical records. About 30% will need medical records. And this is just due to conditions people have, maybe previous cancers that are not declinable automatically, but we need to review the information just to make sure we can take on that risk, as an example. So every so often we will order medical records, which we'll take care of. And then once we get the records, we'll make a decision. But no need for paramed exams, no EKG, no labs. We don't do any of that. It's either phone interview or medical records. All right, this is a good time to check in with Don, see if there's any questions that came up.
Well, yeah, James, this is, I tell you what, impressive. Just by itself, just looking at it. There was just a few questions that had come up. Is there a continuous pay, or is it just the single pay 5, 7, and 10, and then that 8-year benefit, or are those just the options? Is there a continuous pay?
No, so 15 is the max, and you would oldest you could be is 65 to do the 15 pay. However,
okay,
I'll note, if you do run into continuous pay versus some other carriers that have it, please get a 15 pay quote if you can, because that 25%, you'll often find we still are looking very good, if not better. And you can also sell the client on the fact that you're paid up 15 years. There's an end point on when you'd pay. So please make sure to do that comparison.
Oh yeah, every time you want to make sure you're comparing. What we're doing is we're looking out for the best thing for the clients, and we want to give them the best options, no matter who it is.
Exactly.
But I like the 25%. This put you guys right there with everybody else that we work with. So I'm glad we were able to bring this on. There was another one with for benefits, is there a lifetime benefit option for their benefits?
The max is an
Or is
8
it
year,
just-
so only one carrier offers a lifetime benefit. That's One America.
Okay. Let's see. I got another question here that's coming in. What is the maximum age for purchase?
Good question.
So would that be the, okay.
Yeah, so on a single pay, the max age is 75. And then kind of reiterate on the multi-pay, the max age is determined by being able to pay up by age 80. So if you wanted to do a 10 pay, the oldest you could be is 70. That way you're paid up by 80. Just with any of the multi-pay, you have to be able to pay up by age 80, and that determines the max age for that particular option.
Okay. Looks like there was another question. What is the life insurance amount on a single pay 60-year-old male for 100K? That's something you'd be able to
Okay, so
answer.
that's going to be more of an individual question.
Right.
You have to take a look at a quote to see what that is specifically. What we're just showing was the long-term care benefit pool. If I had to guess what it would have been based on that 6,200 initial monthly benefit, it's over 120,000.
Okay. Yeah, we can reach out to the agents and go more details with that afterwards. So,
Sure.
Other than that, it looks like those are all the questions that were in the box. I appreciate your time today very much, James. It was excellent.
Sure, yeah, I'm happy to present, and especially with how you can see how strong we are from all the features, the indemnity, and the pricing. I will note something here is we are not in California. We don't have product in California, unfortunately, and no time horizon at the moment. However, I do want to make sure everyone is aware of how Securian works with their cross-border guidelines. So it's very flexible. So if you have someone, for example, it's in California, if they happen to be in another state for whatever reason, whether a very common reason would be business travel, or if they have other properties in other states, what have you. As long as they're in the other state when they sign the application, that would be fully acceptable. So for example, if you've got someone who lives in California, like myself, and travels to different states for work, when they're in another state, they can sign that state's application and put their California address on the application, and that would be perfectly within our suitability guidelines. That would be okay. So there is an opportunity, although smaller, with California clients, but because we stand out so well in pricing and in the features, it's something to consider when talking to your California clients. If they plan to be in another state, you can offer that secure care while they're in that other state. They just sign the application. Delivery does not ask for your location, so delivery is okay. But just the solicitation has to take place when they're in that other state. Just make sure you are licensed for long-term care and for that whatever state that may be, if they were to take advantage of that option. So if you have any further questions on that, feel free to reach out to Don. Him and I will discuss on how that would work. That's an option that you have available to you.
No, that's huge. I mean, people travel all over the place for different things. So basically, you're saying that if they go, let's just say they go to Oregon, it's basically on Oregon paper. You're writing them in there. You just have to have your non-res for that, and you can actually write them as an Oregon case. Correct?
That's correct. Yeah, Oregon would be a great state. One state which wouldn't work at the moment is Arizona, because Arizona has not done the 25% adjustment yet, though I am expecting it probably by the end of April, Arizona will be in place. So we'll be there shortly. But just like you gave an example on Oregon, that's exactly right.
Perfect. Yeah, that can be very large because we have such a large base of agents in California. And just letting them know that, you're non-resident, that if your client does go out of state and they're looking for this product, we can definitely help them out.
Yep, absolutely.
But with that, just Yeah, just a few housekeeping before we close up here. As everyone's aware, with contracting, you want to make sure you're fully appointed before you can actually get quoting and applications and stuff. We want to make sure you're fully up to date so you don't have to worry about it. We're going to actually reach out to everybody that's been on the webinar. Well, if you have more questions, we can go over it, get your appointments in order, and get you started rolling with this. James, this has been a very, very excellent webinar. A lot of detail, but I tell you what, the information was great. Everybody, thank you very much for joining us today. We will be reaching out to you soon. Have a great day.